All right. So, hey, everyone. Thanks for joining today. My name is Rishi Shah. I'm a director of product management here at YCharts, and I'm joined by my friend Connor Kitko, who is the director of product marketing. He's actually probably 10 feet away from me in another room, but that's how the virtual world is nowadays.
That's right. If we bang on the walls loud enough, then maybe one of our mics will pick up the other person.
Yep. All right. Well, thanks for joining again. We're really excited to show you some great Q4 2021 data from our economic summary deck. So, as we do every quarter, today we're going to be reviewing the latest economic summary deck, and that data is as of Q4 2021. And our hope is that this data can help you with your investment decisions in general, with your communication efforts and just give you some great visuals to work off of. So excited to be showing you this data, and hopefully that helps you kick things off here in 2022. Just some housekeeping things. Clients can actually access this deck by logging into YCharts and going into your account. Connor, if you want to show them how to find this, you could basically just hover over support and click on support topics. And then that first section there, resources, you can click on that and go ahead and click on presentation materials. And you'll see that we have not only the latest economic summary deck, but also all the historical ones that we've created. So a lot of great data and visuals there, and we'll continue to update this list every quarter. So you can find the deck right there in the support section. Two final reminders today before we kick things off. Nearly all the data we're reviewing today comes from government agencies or other reputable sources. That's where our economic data comes from. And this data is as of Q4 2021. So we're not going to have any of the 2022 data in there yet. We're also going to be emailing you a recording of today's webinar and a copy of the deck to all attendees that have joined today. So you can expect that in your inbox tomorrow. All right. So I think we're all set. Connor, why don't you kick us off?
Yeah, thank you, Rishi. So here we are getting into the first section of our Econ deck and talking about general high-level market data first. So we're looking at major index performance in just Q4 on these charts and tables. But for a little bit of context, the S&P 500's total return through all of 2021 was a really impressive 28.7%. And that's actually the fifth time in the last 6 years that the S&P has posted a double-digit gain. So this bull market is still very much alive. And in Q4, US stocks were roaring back from a flat Q3. The S&P 500 led major indices. It rose 11% in Q4, but the picture internationally was a little less exciting. In the bottom left table here, we see some Q4 return stats for some international indices. The MSCI Emerging Markets Index fell by 1.2% in Q4, and in Q3, it fell by 8%. So going into the last half of 2021, we definitely saw stronger performance from US equities versus international stocks. Now looking at some broad market performance through the light of sectors. As compared to the S&P 500's 11% return in Q4, just 4 out of the 11 sectors lagged that broad market average. So industrials, energy, and financials climbed 8.6, 7.9, and 4.6 respectively. And the communications services sector actually was the only loser of all 11 sectors. A lot of the cyclical sectors actually enjoyed a quarter of outperformance, with real estate gaining more. Discretionary performing so well amid rising inflation, but that is, I guess, to be expected for that real estate number, with a lot of people seeking, current income via rentals, income that can be adjusted easily as inflation rises. So now I'll pass it back to you, Rushi.
Yeah, thanks, Connor. And I think one of the interesting ones on that last slide was real estate. And we're going to be talking a little bit about that, including on this slide here. So the next few slides on the deck are what you might have called quilt charts, or you might have heard that terminology. They're becoming popular. They are popular visuals because they tell a great story about what's going on within asset classes. So this visual here has asset class performance on a periodic basis. So you'll notice that the leftmost column is year-to-date total return, which since this data is as of 12/31, that's going to match the 1-year total return column. But then you also have 1 month, 3 month, 6 month, and then some of the longer term timeframes like 3, 5, and 10-year. I think some really interesting takeaways here. Overall, commodities ruled a lot of last year, and they were up at the top here when you're looking at the year to date and 1-year total return. However, most recently, when you're looking at 1, 3, and 6 month, it was U.S. real estate that really led the way to close out the year. So, with that strong real estate market, with different economic things like rising rates and mortgage rates and things like that we're going to dig into a little bit later, real estate really took off towards the end of the year, which you could see in this quilt chart. Also, I thought it was pretty interesting that growth in value over that year to date and 1-year time frame as well, we're pretty close. There's always headlines of growth versus value, and in 2021, U.S. growth grew by 27.6%, whereas U.S. value was just under that at 25.2. So pretty strong performance of both of those asset classes in general. And then just kind of looking at this last quarter alone, which is that 3-month total return column, it's interesting to see that emerging markets was the only asset class that was negative. So every other asset class here in that last quarter, which was a pretty strong one in general, was positive. So interesting data overall. Connor, if you go to the next slide, very similar visual. It's that quilt chart view. However, this one is quarter by quarter. So it gives you more of a historical view of these asset classes. You'll notice all the way to the left is the latest quarter, 12/31/21, and it goes all the way into 2018. So you have quite a bit of history here. In general, some key takeaways here. So you'll notice, again, like we talked about on the last slide, commodities took a step back a little bit. We're pretty much flat in Q4 of 2021. Also, there's clearly two columns here that I think stick out or don't really fit with the rest of them, which is interesting. And it's the ones that you would think, right? It's the 3/31/2020. So Q1 of 2020, which was that huge recessionary period, or the huge drawdown in the markets in general. And then Q4 of 2018. And you'll notice in both of those columns, US Treasuries led the way, and a lot of the other asset classes kind of got hit there. So interesting overall. And then something else, and I'll leave it at this one, is in this last year in 2021, it was interesting how US markets outperformed the world ex USA in every single quarter in 2021. So you'll notice that the green S&P 500 tile or square is higher than world ex USA in all those quarters. So some really good takeaways from these two slides in general.
Yeah, and even over the long term, reflecting what we just quoted for Q4, that real estate, U.S. stocks over international commodities. So a lot of trends holding up recently that we've been taking note of for a little while.
Yep.
So this next slide, performance of diversified portfolios, all that data Rushi just reviewed really lends itself to a conversation about diversification with your clients or any other investors. So this visual shows how the broad stock market and 3 allocation portfolios have performed over the last year. So shown in green is the S&P 500, and then in purple, orange, and blue respectively are an 80-20, a 50-50, and a 20-80 equity fixed income portfolio. over the last year, the S&P 500 fell by 5% or more on just one occasion. And that translates to relatively greater returns for more aggressive allocations. And the market was so calm last year. In fact, I know we've got some more choppy waters here at the start of 2022, but last year, things were so calm that an 80-20 equity fixed income allocation outperformed that 50-50 allocation by more than 6 percentage points on the whole year. And its max drawdown was just 124 basis points, or 1.2 percentage points worse than that 50-50. So you're getting more return and really not that more severe of drawdowns by adding more equity in 2021. That said, we're seeing it now, and we saw it back in March 2020. The market environment can change very quickly. So I wanted to take this into YCharts, though, because a lot of advisors, during communication, showing visuals, just want that demonstrative visual like this one to talk about conversations around allocations and diversification. If I jump into model portfolios, and I see a long list here of all the portfolios I've created, but if I click create in the top right and new from template, there's a lot of these just basic examples that we've preloaded in here for you all to take advantage of. So in these model portfolio templates, there's some benchmark options, there's some maybe more curious portfolios to look at, but I want to call your attention to these ETF models, because I can quickly just say, yeah, I want to pull this 80-20 allocation into my account. You can save this down. And then once you create, a few of these at different allocations, showing them all on a single chart through periods of interest or when clients have questions, is great to just show them generally, here's how a portfolio similarly structured to yours has performed or might perform in these conditions. Okay, moving right along.
Yeah, thanks, Connor. So that's awesome, that tool, and we use it a lot. And I think a lot of our users are loving the model portfolios tool to tell that story, like you mentioned. But let's move on to bonds and interest rates. So in this section, we just have one quarter, and it's the interest rate summary slide. So this one's great because it's the typical yield curve slide. So if you're familiar with the yield curve, it has basically all the different interest or treasury rates over time. And so on the left side of this line, you're looking at some of those shorter term yields or rates. And then as you go along, you'll get all the way up to those longer term rates. So it's really helpful to understand where the yield curve is and also where it has been historically, and compare and contrast some things to get some key takeaways. Right now, there's a lot of eyes on the yield curve, and I'm sure there always is, but most notably with the Fed really thinking about raising rates this year and that being in a lot of headlines, the yield curve could be a useful way to keep an eye on what's actually happening to the treasury rates. So some interesting takeaways here. You'll notice the green line is December 21. So that's the yield curve as of the end of this past year. And you'll notice that compared to 3 months ago, that yield curve is flattening, which means that the shorter term yields are actually increasing and the longer term ones are decreasing. So we're noticing the flattening compared to 3 months prior. But I also think it's interesting to compare it to a year ago, which is that blue line. And you'll notice that basically across the board, all rates are higher than they were a year ago, which we're obviously seeing in the markets. We're seeing with what people are expecting the Fed to do. So really interesting visual. You can find this on YCharts, and I'll kind of show where a little later. But on the left side, it's just a comparison or just a table format of this yield curve where you can look at a bunch of different types of yields as of the last 4 quarters of last year.
Awesome. Okay. So Rushi just spent some time on rates, and we'll continue on into some more interesting macro data from the last quarter. So here we're looking at a heat map of various economic indicators and their trends over time. I do want to call out that the first 4 columns here on the left are quarterly, and then further out into history, we're just taking an annual snapshot of these leading indicators. So while the US stock market had a strong Q4 to close out the year, a lot of indicators were showing similar results, or they were flat compared to Q3. Consumer sentiment we saw drop slightly quarter over quarter down to 70.6, and that was the lowest value of the year for that consumer sentiment indicator. In addition, housing starts and US building permits stayed relatively the same as we saw in Q3. Finally, Rushi was just talking about treasury rates, and we saw that the 10-2 treasury yield spread decreased to 0.79%, which is close to the 2021 annual low for that indicator. Well, actually, going back to 2020, it was just about at that exact same point. So this is the low. Some more macroeconomic activity. So this slide shows trade activity between the United States and some key trade partners. The US trade balance on goods and services continues to plummet to an all-time low here on this top right chart. The chart on the left, however, this shows US imports continue to trend higher past those pre-pandemic levels, currently just shy of 860 billion. And US exports, on the flip side, have just recently returned to that pre-pandemic level. So this might indicate that difference in the mentality of US trade over time. The chart on the right, which is measuring the difference between these two, really shows the recent jerkiness of our trade balance, but then once again, making a new record for imports compared to exports. In this table on the bottom here, we see how imports have increased year over year in all regions, or Mexico, Canada, the EU, and China. Definitely want to call attention to this really large 167% increase number, very large year over year increase for imported services from Mexico. And just want to call out too some recent events. If you've been following some shipping and trucking strikes in Canada, we'd be interested to see how these numbers are affected as, a big trade conduit. The US Ambassador Bridge connecting Detroit, Michigan with Ontario has been a big focal point of that strike and preventing goods from passing between the US and Canada. So we'll be keeping an eye on that figure going into this next quarter of 2022. Rushi.
All right. Yeah, this housing slide is pretty valuable in all the stories you could tell with it, and especially with the way the real estate market has been in general. So I'm going to kind of break down each of these one by one, and I'll start in the top left, which is mortgage rates and originations. So you can build these charts in YCharts using the fundamental charting tool. And what we've done with this chart is the top line is the 30-year mortgage rate, which hit kind of that bottom in, towards the beginning of 2021 or end of 2020. And since then was pretty stable until as of late, where we're starting to see it really increase along with other rates in the economy. So as that is increasing, you're noticing the second line, which is the US mortgage originations. You're seeing that line kind of fall off from that high at the end of Q4 2020. This kind of makes sense because as rates are increasing, there's less opportunity or less appetite to maybe refinance your home or in general, just buy a home and have a mortgage or start a new mortgage. So that originations number has come down a little bit, but it's still up over 100% in the last few years. So it's amazing how much those have increased as of late. And then the last line here is the number of mortgage originations. What percentage of those are refinances? So it's the refinance share. And you're also seeing that number come down a little bit, which is which kind of makes sense because now that the interest rates aren't as low, maybe everyone got their refinancing done last year. And so now you're just seeing regular mortgage or brand new mortgages being originated rather than people actually refinancing, which might tell another story, which kind of lends well into this next chart on the right, which shows the overall consensus sentiment for home buyers in general. And you're seeing all four of these lines or indicators increasing a little bit. So that includes prospective buyers, uh, single family home buyers, also what's expected over the next 6 months. And then lastly, the US housing market index. And you're seeing all of those take quite a hit in 2020, but come back even stronger than before, which is clearly showing in our housing market. So really interesting story, compelling story, I guess, that you can tell with both of these charts. And then down at the bottom, we just have general housing indicator reviews. So this is going to tell you or just show you a picture of the most important housing data points and how they've done compared to 1 month ago, 3 months ago, and 1 year ago. You're seeing a lot of green there. And really the only two things that have decreased are US new single family houses sold decreased year over year, which might make sense if there's less supply out there. And then also the US pending home sales index decreased slightly over the last month and over the last year as well. I did want to take the time a little bit here to show you where you can kind of build a table like this housing indicator review one. And also, I wanted to show where you can find that yield curve too, since we showed that earlier. So within YCharts, if you hover over Tools and click on Excel, it's going to take you into our Excel add-in feature and some things you could do here. So if you're not familiar with the Excel add-in, it's a one-time download. You download that file and it connects to your Microsoft Excel. And if you're a professional user, you'll have access to the Excel add-in, which allows you to pull in basically any data point from YCharts into Excel. So we have a lot of advisors and a lot of users in general that love using this tool to build out their models or build out visuals and all sorts of things. But we also did some of the legwork for you, which is that templates tab right there. If you click on that templates tab, you're going to notice we have just, I believe, over 50 templates at this point. And you can click on some previews there and view how they look, but they all have some great data and visuals in there. And we have a lot that cover securities, cover portfolios, all sorts of things. But if you scroll down to the macroeconomic section, you'll see that treasury yield curve template right there. And so you'll be able to build that yield curve yourself and pick custom dates if you'd like. And there's also a couple other ones like the macroeconomic overview template that'll contain a lot of that important information that we just covered. So some pretty useful data points and Excel templates for you if you're a YCharts professional user.
Great. Hey, Rushi, before we move on from this slide, just wanted to ask you personally, does this slide stir up any feelings as someone who just bought a new home while trying to sell his old home as well?
Yeah, definitely. I mean, I think Chicago, I'm not sure where everyone on the call is from, but in Chicago, the real estate market's a little different than what these data points are saying. I think people are trying to move to the suburbs more than stay in the city like myself. So
yeah,
been fun.
Wanted to rib you a little bit for that one. All right, on to the next. Rushi, I think you're going to cover some US dollar strength too.
Yeah, let's cover this one too. So US dollar strength is another slide that is pretty topical right now with all the talks about inflation in general and basically just how the dollar has strengthened against some other currencies or even weakened. So the top chart here you're going to see is US CPI, the consumer price index. But it also contains the purchasing power of the consumer based on the dollar and then also the US dollar index. So you're noticing that over time, the CPI has increased, which also means the purchasing power of the consumer's dollar has decreased around the same amount of percentage. So it's pretty interesting to see that dynamic there as we're looking at things like inflation. Down at the bottom, you're comparing the US dollar to a few other countries' currencies. So you'll notice that three of these charts, the US dollar to euro, the US dollar to pound sterling, and the US dollar to Japanese yen, have all increased over time, whereas the US dollar to Chinese yuan has kind of decreased. So there's been a little bit of a different dynamic from a China standpoint to some of the other currencies on this chart or on this slide.
Awesome. And, we'll transition into some charts of the moment here. So these are some interesting stories that we've been seeing through economic and market data, but we're actually going to start on one that was very similar to Rushi's currency slide there. But we're talking about CPI, inflation. What are the real drivers of this CPI and inflation numbers that we've been seeing recently? So December's inflation rate of 7% definitely translated directly into higher consumer costs, which we've all been noticing at the gas pump, at the checkout stand. We were listening to our friends at Animal Spirits talk about Disney World prices recently. Apparently Disney World is packed and more expensive than ever. But this core consumer price index, the purple line on this chart, is CPI less food and energy expenses. And this clocked in at 5.5% at the end of Q4, which, just like this top line inflation number, is a 20-year high. Just to illustrate the amount of Econ data that's in YCharts and the different variations of each indicator we have, I wanted to jump into a chart here, and you'll see that we're looking at those. These are the CPI year over year indexes. So these are, tracking those inflation numbers that we just saw on the chart. But if I actually flip some things around here, so I'm going to take off those year over year CPI numbers and just add the CPI indices themselves, which may be a little less familiar for a lot of folks, these number levels here, but I'll switch this into a percent change. And it really shows that our CPI in purple has risen 11% over the last 3 years. Core CPI, which is again less food and energy, has risen 9.8, 9.9% over the last 3 years. And then we see CPI for just food in blue, up almost 13%, and the CPI for just energy up more than 27%. So when you're trying to pick through inflation and see what's really moving the needle here, it's pretty clear that it's energy costs that are driving up CPI for a lot of folks. And I will jump back into the deck here, and another chart of the moment is focusing on manufacturing data.
Yeah, I can cover this one. So this is comparing manufacturing PMI, which is the Purchasers Manufacturing Index, and you're seeing that when you compare U.S. to Canada to China, they're a little different, and they tell a little bit of a story. And so the way these PMI data points work is anything above 50 signifies a expanding or a growing manufacturing economy, and anything below 50 signifies a detracting or contracting economy. So in terms of manufacturing. So when you look at this chart, it's interesting to see that the US has been pretty stable, obviously dropped down in 2020 to about 41, but since then has stayed above 50. Canada most recently dropped down below 50. So it's interesting to see that PMI number come down a little bit. And it would be interesting to see why that manufacturing number in general has changed within Canada. And then China, and you look at how quickly China recovered right after that pandemic bottom, and it's been pretty stable right above 50 since then. So a little bit of a different chart for all three of these economies.
Yeah, and really just latching on to that last point, Rushi, of, China, if you recall back to early 2020, made that economic rebound much more quickly than other countries did. And this chart just kind of made me laugh about this V-shaped rebound here. And going back to 2020, everyone's trying to guess like what letter shape the recovery was going to be. And it was like J-shaped, V-shaped, K-shaped, Nike swoosh shaped. Yeah, that was a fun time, a weird time though.
Yeah, hopefully we're done with that.
It's like algebra. Um, okay, moving on to our next slide here. Another chart of the moment is looking at the S&P 500 index, which we're all familiar with and comfortable with, versus an equal weight S&P ETF. So this is the Invesco S&P 500 equal weight ETF. I believe the ticker is RSP. If you've got YCharts up on your second screen, drop RSP in there. But what we're illustrating here is the difference between large caps and everyone else in the market. And this chart really illustrates, how smaller stocks in the S&P 500 have been outperformers since the market's bottom in March 2020. The performance spread is this purple line on the bottom. We're just taking the equal weight performance and creating a spread compared to the market cap weighted index's performance. And this spread will increase when the equal weight index is outperforming the market cap index, and it will decrease when the opposite is true. Now, equal weight's outperformance since late 2020, as I said, shows that small and mid caps have been gaining ground on large caps and mega cap stocks. But around mid 2020, as this spread starts to weaken again, this is indicating a return to outperformance for the mega caps. And what's really driving the S&P to set those new highs that it set at the end of 2021? It was the large caps that were continuing to shoot up in value, the Apples and Googles of the world. And now I will pass it back to Rushi for perhaps our final slide of the day.
Yeah, so let's cover this one that's been on everyone's minds, right? I know for myself, Q4 2021, the holiday season was crazy. Just seeing the lines out the doors at testing centers and everyone trying to get rapid at home tests. So you can go to your holiday parties. It was quite the time, and the data shows here. So we thought that this data would be really important to have on YCharts because as advisors, you're having these conversations all the time. And we've seen that the coronavirus data is valuable for those client conversations. So we added it to YCharts, and hopefully you've found this data to be valuable. And not only do we have the data, but we have the great tools within their charting tool to be able to create things like ratios, correlations, et cetera, with that data. So on the left here, we have some overall data on just cases per day and currently hospitalized cases. So you're seeing that big Omicron spike, and you're also seeing the hospitalizations with that, which is quite a scary visual there. But on the right is a little bit more of a positive tone in general, which is it's basically just ratios of some of these data points. And it's showing coronavirus cases currently hospitalized divided by a ratio of that to the US coronavirus cases per day. And you're seeing that number is actually trending down, which shows that less percentage of people that get the coronavirus are actually ending up being hospitalized, which at the end of the day, the most important thing is the health and safety of all of us, right? And you're seeing that in that bottom purple line that the actual deaths per day versus cases is also dropping down, and that ratio is showing that in that chart below. So hopefully all positive signs for us to kind of look forward to better times here. And this all connects to the markets and the economy in general. And so Connor, if you wanted to jump into YCharts one last time, I just wanted to highlight where you can find this data and where you can find all our economic data. So if you hover over data there, you can click on economic indicators, which will show you all sorts of sources and all sorts of data points that we have and we get throughout the month or throughout the year. You can also search for it in that top search bar. If you wanted a data point like US unemployment rate, for example, you could just go ahead and search for that, and you'll see the predictive search grab that data point for you. We're also we're trying to organize this data in a great way for you too. So we have something called the economic calendar, which we recently redesigned, and hopefully there's some cool filters in here that you can use to. Maybe it's a practice you could do every Monday where you just come into the office and check out what's the economic indicators that are coming out this week. You can toggle through the different days and toggle through the different countries to keep an eye on important data points and when they're coming out. So just hopefully some useful tools here in YCharts to keep an eye on the economy in general.
Excellent. Yeah, that new economic calendar is really fun. It's visual, but also very easy to stay up to date and know what the next big prints are going to be.
Yeah.
All right, everyone. Thank you so much for joining Rushi and myself. We hope that you enjoyed this review of the latest economic data, market trends, and other insights that you can use for yourself or pass on to your clients. Once again, we will be sending a recording to everyone who registered for today's call. So please check your email, probably reaching you sometime tomorrow morning. And if you want to download this deck, if you're a YCharts client, head into YCharts support topics, and then resources to get a copy of this deck. One final compliance reminder before we leave you is that none of this is investment advice, and YCharts is not acting as an advising party regarding client funds in any way. Rushi, once we wrap up here, I'll see you back out in the office, huh?
All right. Yeah. See you in about 10 seconds.
All right. Thanks, everyone. Have a good rest of your day.
Thank you, everyone. Take care.